Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. Clearly, if you go to see, a somber day of trade continues in today's session when we are below the 19,800 mark already. Again, 46,100 is what we are tracking in terms of Bank Nifty as well. And the advanced decline ratio is pretty much in favor of the bulls as we speak. A lot of stock specific action is what we are witnessing in trade today. And joining us to discuss more is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors. Ashish, good morning and welcome to the show.
Good morning to you.
Ashish, let's start the day with few of the large cap names which are in focus. Cipla, 8.5% up move coming in on that counter, the top gainer in terms of Nifty 50. What's your view and what is it that's working?
See, first of all, very good quarterly set of numbers being reported by Cipla, where if you see in the top line side, almost 18% growth and bottom line growing by 45%. And this we are not talking for any defense company or IT company. This is a pharma company, and the kind of growth momentum is picked in pharma sector is commendable. And Cipla being again a front runner of this growth, and it is going to pave way for entire pharmaceutical industry in future. So in my view, excellent set of numbers, and again they are able to foray into US market in quite decent way, as well as whatever the margins guidelines they have given, 23-24% going forward is also very positive. And in my view, this is again a stock which can deliver very good return going forward, and all set to further get re-rated.
Right. So that's with regards to Cipla. Moving on, Dr. Reddy's as well. The numbers have been above what the street was estimating. And clearly, if you see, it's the US business that has come to the rescue. Russia has done well. India has been slightly muted. The stock is up almost 2%. What would you advise investors to do with the Dr. Reddy's?
Yes, again here also, if you see year over year, almost 29% growth and 18% growth in PAT, and it is slightly ahead of expectation. 1405 crore. Nobody has given those numbers, but again, very good set of numbers. And US market, as it contributes almost 47% of their revenue, and there they are firing with all the cylinders because the kind of growth we are witnessing, their new product launches are happening in US market, and at the same time, what were the pricing pressures were there, they are not there now anymore. So in my view, again, Dr. Reddy is a good bet at this price point, and those companies like Cipla or Dr. Reddy's, which are coming out with excellent set of numbers, and there's significant improvement in their margins also. So they are going to be chased for sure by foreign institutional investors going forward also. So my thumbs up for both these stocks in pharma.
Right. Moving away from the pharma space, excuse me, another few companies which are up is also a Sun Pharma, which is seeing gains of almost 1.7%. Let's go to the losers. M&M, a 6% downtick coming in there, and this is post the announcement with regards to investment in RBL Bank. What's your view, Ashish, in terms of M&M specifically? It seems that the market is not really happy because they've said they want to increase the stake as well. But what does this mean from a capital allocation strategy that M&M already has?
Is something like caught a street off guard, if you ask me, because M&M is already undergoing through a major capex for their existing expansion. If you see precisely FY 22-24, they have to spend around 16,000 crore funds for their existing businesses. They are even increasing allocation for EV and other expansion in their existing business. So what was the need to allocate this kind of fund to acquire some stake in bank? So I'm not sure that they have some plan that they'll like to own a bank in future. So otherwise, there's a dead investment if you are not having any such plans. And when any investor is buying Mahindra and Mahindra, you're buying a mobility business. You don't want to see in this company any other unrelated kind of activity. So there's a reason market is not liking this particular development. Because you already have Mahindra and Mahindra Financial Services in group. So what was the need to, infuse that much capital in a bank from an automobile company? So this slightly defocus approach of management. But we should hear from them what is in their mind, because they said they like to go up to 10%. So what's the rationale behind this? But for sure, in short term, this is a negative development. And in my view, the stock can even further drift down.
Right. Moving on from there, you have a Tech Mahindra, which reported numbers, an interesting commentary from the management where they said this was one of the most challenging quarters that the company has seen in the last 5 years. What do you make of a Tech Mahindra? That stock is also trading under pressure. And what would you advise investors to do with a Tech M?
Yes, they are right. In last 27 quarters, this is one of the worst quarter, and the kind of degrowth you have seen in the profitability. The revenue dip was 4%. That is still fine, because your other peer set has also shown, like Wipro, etc., has also come out with such revenue numbers. But profit after tax going down by 38%. This is something which is quite alarming. Things are really not that good in Tech Mahindra. Besides this, other IT companies' stock price was saved because they were able to show good deal pipeline or good deal win, which was also missing in Tech Mahindra's this quarterly numbers. Along with their EBIT margin almost fell by 7 odd percent, which is again a cause of concern for this company. And there's no respite in spite of Mr. Mohit Joshi going at the helm of the affairs in the company, but it's still, in my view, there's no impact coming in. I think when once Mr. Gotani retires, then only the impact can be seen. But in my view, this is a stock which will see more downgrades going forward, and should not be even bought at this price.
Right. Moving on, let's look at a few of the other names which are in focus today. You have a Godfrey Philip. The stock is seeing some smart moves in today's session post earnings. What was your view?
Excellent set of numbers by Godfrey Phillips. If you see from 142 crores to 254 crores kind of profitability, there's huge growth in their top line, which is really good. And their own brands, as well as whatever the franchisee of international brands which they are owning, is all are doing pretty well. And we have seen in the ITC numbers also that cigarette business is doing very well. So ditto for Godfrey Phillips also, and their strategy that they are going to represent in the top segment to international brands, and in domestic segment they cater to the lower product brands, is really doing well. So, and in my view, if 250 crore kind of profit can come in a quarter for Godfrey Phillips, this stock is still undervalued, because if you see, floating stock is hardly any in Godfrey Phillips in retail side. So there will be good appetite going forward also in this company.
Right. Moving on, let's look at Colgate. Colgate has also reported numbers. What's your view on this player?
Yeah. Colgate again, surprise, if you ask me, though stock was showing a lot of strength for last one quarter. But again, it's again in direct play to what rural market is doing, what toothpaste that products are doing, because they are major player there. Have so 11% year over year growth and 7% growth in volume is quite commendable in my view, and they are able to show highest revenue growth for. So after so many years in this particular quarter, this is again a positive side. Again, raw material prices are going up, advertising revenues are quite static, and sales prices have not come down, has also contributed for improvement of this profitability. So in my view, this is again a stock should be kept in radar. Still, stock is going cheap compared to the peer set. It's still available at 40 presenting multiple from FY25 earnings, which is still I find reasonable compared to HUL, ITC, which are at quoting at 60 plus multiples.
Right. Ashish, RVNL, the government is looking to sell 5.36% in the company through an OFS. 119 being the floor price. What would you advise?
Grab it.
Really?
One word.
At current, at 119?
At 119, at 119, you can't go wrong in RVNL.
Hmm.
First of all, again, railway is a theme that will continue to play. Continue to play for at least couple of years at least, because the kind of projects are coming in railway. RVNL being a construction arm for Ministry of Railways, they will get the maximum benefit. And second thing is, if you have noticed, they have recently diversified into NHAI projects also. So, so there's some diversification in their revenue stream too. So this is the reason I like this stock. 119 no-brainer to own this.
Right. So that's with regards to where RVNL goes. How are you looking at a HDFC AMC in trade today? Because if you see the counter, the stock is seeing some bit of pressure as we speak. What's your view?
It is a stock we have seen very big rally already. If you see from 2000 rupees to stock almost touching 2600 rupees. Um, though numbers are quite good, Q1 numbers were pretty good year over year. We have seen almost 50% appreciation. They own almost 11% of portfolio of entire mutual fund industry. But valuations are rich. So some profit taking is happening here. But in my view, this is a stock which should be entered at 2,300 levels whenever you get.
Right. So that's with regards to where the overall, the stocks go. Thank you, Ashish, so much for joining us on the show and sharing those views, because a lot of movers and shakers in trade today, but overall the markets seem to be absolutely flat as we speak. That's all that we have in this session. Thanks for watching, and lots more lined up during the day on BQ Prime. Please stay tuned.